Alrighty, traders. This is Blake Morrow. You are listening to the Daily Roundup webinar, and I hope everybody's having a great trading session. It's pretty slow. We've seen bleed lower in the dollar, and actually the dollar Canadian is at the 127% extension of the last move higher. And whoops, let me get rid of that. I wanted to actually delete this. You know what? I'm going to do this. I'm going to get rid of this one. Remove that, and I'm going to move this here because that's the breakdown point. That's what we need to see to come back up to tell us this channel is actually in play. It's interesting. I was actually looking at crude oil, and I was reading a few things on crude, and crude has obviously rallied, and I've been a big believer for my entire career. Crude is not going to zero. A lot of people believe that that crude will be obsolete, or and it's not going to be as it's going to eventually be obsolete. But look, fossil fuels are going to be around, and probably going to be around definitely my whole life, and probably years after I survive. Are we making a big tectonic shift from fossil fuels to renewable energy and and electric vehicles and whatnot? Yes, we are, but producers will always be able to adjust production to keep crude oil prices at whatever levels that they really need them to be at that point. I think over time, any country that is a fossil fuel producing country is going to suffer in years and decades moving forward, if they are just solely reliant on fossil fuels. But I don't believe that crude, and never did, that crude would be worthless. All right, so and that's what this is, just more of a product of production has come off, and people believe that the economy is going to be stronger globally, and there's going to be a little bit more demand for travel, and it's going to be years and years and years before you see all vehicles electric. It's the way it's going to be. Now, crude oil is testing some pretty key resistance, and as you can see, we're pushed up against the 88% retracement long-term trend line, and this is where we're currently at. Matter of fact, what I can do, and let's go over to a weekly chart, get a better view here. If you take the high, and this is a continuous contract, obviously, to the low, we're near a 38% retracement on a long-term basis. And, the continuous contract, goes down to 10, but you guys might remember in the active contract, we were actually below zero, quite below. We were in negative territory. Now, between here, where we're currently at 60, between here and 63, I think it is going to be rather challenging for crude to make any sizable gains from here. And what that's probably going to do is put a bid, or let me put it differently. It'll probably put an offer in some of these commodity crude related currencies like the Canadian. So yes, the Canadian's weak right now. Yeah, I understand it is, and I'm out of my trade where I basically took my stops close to break even. But that doesn't mean that the dollar Canadian is not going to be trying to make a base around here. Same with the US dollar and Norwegian krona. I know we're below 840 right now, but for all intents and purposes, we're probably still trying to build a base. And at some point, we are going to see crude like we are right now. Crude is starting to roll over a little bit, and that's starting to show some signs of, oops, that's not showing. There we go. Showing a little bit of signs of at least pulling back. Now, we could just be in a bull flag type of pattern, which could very easily be the case. I'll get more concerned about crude and what crude's doing if it dropped back below this $59 level. And if that happens, then I'll start looking for, the Canadian to weaken again, or the Norwegian krona, or maybe even the Mexican peso. So that's just some food for thought. Now, the dollar has had a nice recovery. Let me take that back. The dollar has had a nice sell-off, The Aussie, the Kiwi, other commodity currencies have had a nice recovery today as we're, pushing up against highs. Even the sterling's up quite a bit near its highs of the session as we're climbing towards, 140. The euro, it really isn't doing a whole lot, but be careful. Whenever we're in a holiday and we see the, dollar move the way it's moved right now and have a, little move lower, I wouldn't get too terribly excited about it just yet. I know the dollar is below this channel support here. Let me put it back in. I had to resize the chart. I know we're slightly below this channel support, but try not to get too terribly excited while we're above 90 and a quarter. While we're above 90 and a quarter, I think it makes sense to be a little defensive when dealing with the dollar. I'm not really excited about the dollar as a whole right now. I'm more excited about the sterling, as I've pointed out the last I know in the earlier webinar today, and then also on the week ahead video. I really do like the sterling. I think the sterling looks great. You have the euro pound that's moving lower. I think if you want to try to trade something like the euro pound, any move back up towards like 87.50 might offer a good place to be on the short side. You look at the pound Aussie. I think the pound Aussie is making a nice consolidation, which is eventually going to make a move back above 180. Pound New Zealand, trying to get comfortable now above 192. We'll see how it plays out in the Asian trade, but that's where my focus is right now, is trading some of these sterling cross rates. I think they look, like I said, I think they look pretty good as of right now. But what I've also found during holidays like this, whenever, like, let's say you're dealing with the dollar. I'm just going to use the dollar as an example. Okay. And we close the weekend, like, right around here, right? We have a holiday, and whether we went up or, in this case, we went down, by tomorrow, I wouldn't be surprised if we're back at the opening price, and we could have gone up, and I wouldn't be surprised if we come back down, when North America comes back to trade tomorrow. So I see that a lot during holiday trading. You get this move and everybody gets all excited that, oh, it's starting, and then all of a sudden, it reverts back to the mean, back where we opened, and then we get a figure out where we're going to go from there. So try not to get too terribly excited, especially if you're short dollars right now. Try not to get too terribly excited about being short dollars on a holiday. I'm not saying that it won't work out. I'm just saying that I've seen them snap back more often than not. Steph Mo says, hey, I had a long chat with a friend this weekend about renewables and how we need a place to store this energy, and electric vehicle batteries will be used for that. But like you said, fossil fuels are here to stay regardless. Yeah, I think they are during our lifetime. They will lose importance over time, but I don't believe that's, 5 years from now. I believe maybe over the next 30 to 50 years, fossil fuels will not be used predominantly, and maybe it'll be kind of like I use my kids' Xbox 360 to watch a DVD if I need to, right? Something like that. It's like I still have to I keep one around just to use it every once in a while, but that's it. Just in case something comes across my desk where I've got to watch a video. That's what happens. But generally speaking, I don't use it at all, and that's probably going to be the same with fossil fuels. It's hard for me to also imagine, because I had grown up with old American muscle cars. My dad has restored. He's got two, he's got a Ford Fairlane, and he's got a old Chevy Camaro that have been rebuilt from the ground up that he loves. And so I have an affinity for these things. And it's like, how does somebody like me let go? Well, they don't. But what happens is you have your grandkids or my kids, for example, that could care less about that. And they really would love it more than anything if I bought a Tesla, which I'm not going to, damn it. I'm trying to hold out as long as I can. But I'm also the worst technology adopter in the world. I think I was probably the last person to own a plasma. I was probably the last person to own the whatever, high-tech TV screen. I don't even keep up with it, but anyway, that's neither here nor there. But it's a slow day, guys. And let's just take a real quick look at, currencies. Just like some of these majors, like the euro, if you missed it earlier, I actually would not be surprised if we started to build like a head and shoulder pattern here, like an inverted head and shoulder pattern in the euro. So see if we can get a dip back down to 120.50, probably attract some buyers in the euro. With sterling, I still think looks bullish, but what I would look for is maybe dips to play it long, maybe a dip back down to 138.50. The Aussie and the Kiwi, they're just kind of bopping around, but they're staying relatively bid because equities are bid. And if you look at the S&P, we're at highs. I can't write off a move to 4,000 while we're above this 3870. But this is all that matters to me. This support. It's the only thing that matters to me as far as risk appetite goes. As long as we're above that, there's no reason to be bearish stocks. And that means there's no real reason to be bullish the dollar while above there. I'm not saying that we can't get a dollar move. I'm just saying that overall you've got to be more defensive in the dollar while we trade, above this 38.50, 38.70. We drop below that, then I think the dynamics of the dollar will change. I should point out that the dollar Mexican peso is holding up pretty well. We're holding above the 618 retracement. We're holding up really well with stocks strong. So typically when stocks are strong, I personally would have thought the dollar Mexican peso would be trading down here, not down all the way down there, but like 1970, 1975, and we're not. So is that telling us something? Not currently, but I would keep an eye on it. I would. Volatility is at 20. It's at really key support. We'll see how it opens up tomorrow and overnight, but this is really, really critical support in volatility. Just so you guys know, I mean, this is big time. We've been holding above this forever. So, but I would think if stocks continue to stay strong, volatility will finally break down. But it's been holding up. All right, guys and gals. Hey, I want to thank you so much. Oh, and also I need to mention this for Stelios, Truth and LIBOR. Stelios's book. If you haven't picked up your copy, please do so. I'll put it in the, this is obviously to support Stelios and his he spent the last 3 years writing this book, and I'll put it here in our chat box so you have it. Okay. If you haven't picked up your copy today, make sure you do it. All right, guys. Hey, thank you so much. Thanks, Brock. Thanks, Steph. Thanks everybody else that's listening in. And thank you always for your support. I really appreciate each and every one of you. So thanks, guys. Have a good one. And enjoy your President's Day if you live here in the U.S. Oh, Steph says, Blake, I missed earlier this morning. I noticed the bias chart shows euro dollar in range between 120.80 and 121.55. Is that right? Yes. And like I said earlier, I wouldn't be surprised if the euro slipped back down to eventually down to 120.50 before finding some buyers down here. Okay. All right. Thanks, guys. Have a great one. I'll talk to you soon. Bye-bye.